Hello, this is Eric Parnell, Chief Market Strategist of Great Valley Advisor Group, and I'm here today to talk to you about the hot stock summer. Memorial Day weekend is past, the summertime is here, and although it's been a great year for stocks so far, there's good reason for optimism to think that upside could continue as we go through the summer months. So what's going to be the driver of this strong performance? Well, whether we're going to a water park or going to the shore, it's all about the liquidity, because the liquidity forces behind this market remain strong. And investors remain comfortable with taking on risk as we're going through the summer months. What are some of the indicators that show that the liquidity environment remains so supportive? Well, the first thing that we can look at is high yield spreads. And in particular, let's take a look at the lowest quality bonds in the high yield universe. Because if investors are willing to take on the highest level of risk in capital markets, that means they should be comfortable in owning stocks. When we take a look at CCC spreads, we're seeing that they're not only low, but they're actually trending lower as we continue through 2024. That's a sign that investors not only have abundant liquidity, but they're willing to put it to work. Another indicator of a favorable liquidity environment actually comes from the inflation readings. Yes, we've had some hot inflation readings so far this year, but the trend in inflation has continued to be lower throughout 2024. And as we take a look at inflation expectations over the next 5 years, we see that an expected average rate of inflation in the 2.5% range, a range that the market's very comfortable with in terms of putting more capital to work as we go through the summer. A third item that we should look at from the liquidity perspective has to do with the Fed's balance sheet. Going back to 2022, the Federal Reserve has been steadily shrinking the size of their balance sheet, which is another way of saying that they're taking liquidity out of the marketplace. One of the things that the Fed announced last month before the Memorial Day weekend was that they're going to reduce the pace of their balance sheet reduction. Basically meaning they're going to be leaving more money in the system for banks and for investors as we continue through the second half of the year. The last thing that we shouldn't forget is that it's an election year. And one of the things that's important for politicians, they want to get reelected. And how do you get reelected? One way is to make sure that there's sufficient fiscal policy support, putting liquidity into the system to help voters feel good, to help reelect their politicians. Those forces are one of the reasons why we see election years are good year after year over time. These are just a few of the positive factors, including continued strong earnings growth and a robust economy, that give us optimism to suggest that we could see higher stock prices as we go through a hot stock summer. Thanks for joining me for this latest Market Insight, and I look forward to seeing you again soon.